Hello guys, welcome to Beginner Technical Analysis. Today I will teach you about the EMAs or the Exponential Moving Averages. This is one of my favorite indicators that I love to use when analyzing charts, so let's get into it. As you see, I have these three lines over here. These are Exponential Moving Averages. Yellow line represents 50 EMA, white line is 100, and purple line is 20 EMA. I'm only using 3 currently, but you can also use 200 EMA. I only use it if the price of an asset has gone well over 100 EMA. EMAs track price trends over specific time. 100 EMA tracks 100 days and so on. EMA uses SMA or simple moving average while applying multiplier to it and adds on more recent data. EMAs identify support and resistance, reversals, continuations, and measure trend strengths. When you see a bullish candle break through 50 EMA and confirms well above it, this is an indication of bullish movement. Further confirmation is when 50 and 100 EMAs cross and bullish candles are formed above the EMAs. If a bearish candle breaks below 50 or 100 EMA and cross occurs, this indicates bearish movement or a downtrend. For more in-depth explanation, technical analysis, and more, join PN and Friends. The link is in my bio.